Good evening. Welcome to my late night appendix on my 4-hour chart video. So this one's going to be on ETFs. First question that probably pops into your head, why ETFs? Why am I talking about ETFs? Um, ETFs, or exchange traded funds, they are these funds, publicly traded funds, where they pick up futures contracts and they control positions based on these future contracts. Some will long them, some will short them. They'll usually, sometimes they might hedge, but they'll usually not be into hedging. They usually just pick one or the other. So, what does that have to do with you? Futures contracts, they're very intimidating to trade. Well, the reason is because they require special brokers. They require a certain amount of margin. And in futures, margin means the opposite of what it means in stocks. It means money that you have to have so that the banks are comfortable giving you the future contracts and counterparting with you. But basically, all that stuff you have to deal with that in futures, and it becomes old hat. You get used to it. But if you want to do something a little bit easier, or if you want to do something with that requires maybe less money, then you can use ETFs. And ETFs, you can just trade them straight out of your stockbroker. Okay, so that's a very that's a very strong pro of ETF trading, and that's why I'm an advocate of. Um, I shouldn't say that. I shouldn't say that. Technically, I'm neutral. Technically, I don't have a preference between futures and ETFs, and I don't recommend either one. But between the two, ETFs, they have certain advantages for smaller, um, yeah, people with lower risk tolerance and people with less money, you know? So without further ado, let's get into the charts. Let's take a look at what I want to show you about this. So on the left, we have our NASDAQ. Um, this is actually our NASDAQ E-mini futures. This is the NQ. This is basically the flagship premier. Um, Actually, the S&P is a flagship premier of the CME, but this is basically its sister. This is the flagship's sister, and on the right, we have TQQQ, which is the triple leveraged ETF for the Nasdaq. In um, what's that word? Yeah, well, it's ProShares triple leverage ETF in the Nasdaq. So if you'll take a look, we see we have an order block. Okay, this is what I want to show you. This one's kind of a proper order block, right? We look over here, we see an order block. Okay, kind of ugly, kind of small. That's all right. We come down, we tag the order block, we run off. We come down, we tag the order block, we run off. Okay, so far, are you starting to understand? And then we do this. We do a higher low, right? Right in here, we do a higher low, right off this order block right here. So are you starting to understand? Are you starting to get it? Um, what I want to do with these moving forward is to introduce um, specifically for like commodities and all those things that are really difficult to control risk in. I want to introduce this into this simulated trading that we're doing here. So not real money. It's all entertainment. It's all entertainment value. Just take it as entertainment. However, check Roger that we're going to be adding these ETFs. Really with the ETFs, what I want to do is I want to show how they. I want to show how they can really help control risk, and I want to show how they can be used for. No, I don't want to show any use. There's no usage on this channel, right? You got that right, Chuck Roger? No usage on this channel. Nothing useful, nothing to see here, right? But at the same time, I want to show how um, the weekly range in the futures can be ridden in the ETFs with simulated, right? Let me say that again, simulated ETF trading. So in our simulated futures trading, we will also do parallel simulated ETF trading. You understand? And that's what I'm going to do for your entertainment. Do you understand? Okay. So now that you understand that we will be doing both of these types of, well, basically now that you understand that in the simulated trading, I'm going to quote unquote test the hypothesis that these ETFs can be used to control risk in the futures by dialing back or well, in some cases it can even lay it on, but for the most part, yeah, I will be adding that tomorrow. Tomorrow, for your entertainment, there will be simulated ETF trading alongside of the simulated futures trading. And potentially, if crypto does something cool, something that I like, something that's not horrible, disgusting consolidation, simulated cryptocurrency trading as well. So those three types of things are going to be happening tomorrow. And yeah, hope to see you there. Oh, last thing. The power of three happened here, just as it happened in this one. So just kind of check Roger that, and good night.